Hello, everybody, and welcome back to another episode of the Commodity Insights podcast with the crew at Farmers Trading Company. I guess we'll get started with the grains to start this week. It's been a ugly week in the grains. They keep slipping a little lower and lower, but the beans did have a nice little recovery today. Looking at the charts, did they maybe find some support there, Andrew, or what are your thoughts with that bean market?
Yeah, to answer the question of did they find support on there? Not really, from what I can tell at this point here. You're going to be looking at contract low to be some of our supportive areas here. Could it stop anywhere prior to that, though? It certainly is a possibility. Looking at like a new crop November soybean here. I need to redraw something on my chart, but it looks like we came right down to that 62% area of a retracement on that new crop beans. So could you maybe call that a bottom here in the near term? I think it's worth looking at here so long as you don't have a close below that 1158 area on the new crop beans. And then as far as the corn goes here, kind of a similar answer that soybeans. We've come up a ways and sold off a ways then, and it's kind of right in the middle of no man's land from what we can tell on this chart. You held a 50% retrace on this most near-term rally here. So as long as we can stay above that, I think you're okay. We're going to be looking at the US dollar and South American weather going forward here.
And then over to you, Vince. Fundamentally, I guess what would you say is the biggest culprit for this slip off in the beans here in the last few days?
I think most of it is a lack of any weather concerns in South America or the US. We've had dry areas that have gotten rain. Future forecasts are really looking at drying out. Planting progress should be able to get rolling. When we looked at Monday's report, looks like everything was pretty much on course, nothing behind. And I think you just got to get through that. We haven't seen any flash sales the last couple of days on beans or corn as we saw last week. So hopefully we can get those back again. But I think most of it is you got to find somebody that wants to buy it, and if nobody wants to buy it, the path of least resistance is down. And somewhat similar to Andrew, still looking at that 1140 and a half area in that July is major support. If you close below that, you're probably looking at $11 on beans and corn. We still need to hold this 438, 439 area. We keep coming up to those 20 period moving averages and fail, and right now I don't see a lot of reason to do anything different than that.
And in that corn market, Vince, has that ethanol report, is that giving us any bullish news or is that supporting this market at all?
It has been really good supporting this market the past several months. And when we looked at the numbers on Wednesday, both the production was at 11 or 12 a week low, the first time we've ever in this marketing year that we've slipped below needed bushels to process to get the USDA's goal in here. Not that it's below it by a lot, but it's below it. And we did shrink a bit in the bean oil, or excuse me, the corn oil stocks, but not a heck of a lot on that ethanol like you'd like to see for the production drop.
And over to you, Andrew, with the disappointing wheat market today. Is that just what the wheat market does, or was there some reasoning behind that, or just favorable weather conditions, or what were your thoughts with that one?
A combination of a lot of different things. There's talk of rain going in some of those southern plains, Kansas and Oklahoma. There's chances, and they've gotten a little bit here near term. So there's that. And I think you're going to look at some technical trade more than anything at this moment. You're in a bit of a wedge formation on that Kansas City May chart, and it's on almost all the wheat markets actually in that wedge. And we were just getting close to the top end of it, so they decided to sell it off today. Would it surprise me if tomorrow we opened lower and found a little bit of support in that market? I don't think I'd be too surprised if that happened here and we went back higher another 20, 30 cents again. Just overall sideways trading the wheat market with probably a 30 to 40 cent range right now until we get the weather market to tell us something dramatically different.
Do you have any thoughts on that too, Vince, that you'd like to add in that wheat market before we move on, or any of the grains?
I think Andrew was spot on in where he's at. I think we look at Thursday morning and if we're lower and we find support, that's good. Also, let's keep in mind we do have weekly export sales numbers out on Thursday morning. Not sure they're going to be anything big and dramatic that's going to make the market move, but it would still be good to see good news on all of the fronts.
I think we'll roll on to the livestock then. Let's start with the cattle market. It's been the most interesting one here, I guess, on my thoughts. Has it found some footing here after the bird flu scare? Are we on the way up and this deal's on the mends, or is this just another sidestep before we jump off the cliff here, Vince?
I think only time will tell us the answer to that, Connor, but the big sell-off last week was a bit surprising and scaring that there's still people here to liquidate, but you had to be impressed at what we did on Monday and Tuesday of this week. If you go back and you look at numbers that several people would have had come up early Monday morning when we had the $3-4 rally, cash sales averages on Friday's market were down $14 from Thursday. And we were still higher, and usually that'll make a big effect. So I think you're building some confidence there, and that's what you need to continue to do. Could you see those feeder cattle put on another $5 to $15, and the fat's another 5 to 7? Yes. Will they do it? I think we just got to be patient and see where they're at. But right now, that cattle market feels like if you get some decent rallies, you probably want to put some protection on if you don't have some in place already.
And over to you, Andrew. This slip in the cattle market, it's everybody's been throwing the bird flu headline around, but there's also been talks of the stock market collapsing, or not collapsing, but coming down here in the last couple of weeks, and that's kind of drugged the cattle market with it. Is there fears that that stock market could continue to kind of slide and that could pull this cattle market down lower? Or you think the cattle market's found its footing and is going to differentiate itself from that stock market?
Yeah, I think people like to blame the stock market when they can't think of another reason, but where they come with some of these things, I think, is if people are losing money in the market, they don't have as much liquidity out there and they can't afford some of these more expensive cuts of beef, so they're going to look for a cheaper meat option, I think is where people come at when they look at this here. But do I think the stock market is entirely to blame for why the cattle sold off so much in the last 2-3 weeks? I don't know if it's entirely the reason, but it certainly seems to have correlated. So there might be something to that there. Um, to kind of echo off of Vince a little bit, if you rally, into some of these levels, I like the idea of putting some hedges on. When you look at cost of interest, options are very reasonably priced, so do not be afraid to be a buyer of some options to give yourself protection in there if you need it.
The last market we'll touch on here is Andrew's favorite one, the hog market. It's been an interesting one with the ups and downs here in the last few days, and it seems like we maybe ran into some resistance on those charts. What are your thoughts with the June hogs there, Andrew?
Yeah, June hogs last week, they certainly felt pretty top heavy when they got up close to that 110 area, and they did fall off pretty aggressively here. I think they were following the other livestock markets a little bit, and just the spec fund traders lightening up some of their net long position. Then later on in the week, you did find some support at that 78% retracement from that most recent move higher. And if you draw an uptrend line off like your January low and your March low, we came just below that a couple days ago, and then we did find support at that. So right now it looks like it's just sideways to consolidation in that market, and we'll see how they want to behave moving forward here. But looks like the hog market has a potential to be strong for a little ways here yet anyway. But just from a technical standpoint and how net long the fund traders are, I think a person wants to be a little bit careful, especially if you're raising the hogs. I wouldn't hesitate to put some protections on there.
And any thoughts on that hog market too there, Vince, fundamentally?
I think the only thing I'm going to look at is one comment that Andrew made with the spec longs in the hog market. The other side of that is the producers are record short. So there is many of these guys that have some protection on. I will agree with Andrew when you're at some levels up there. If you got up in that 1.7 to 110 area in those summer months, and I'm not sure we do a lot better. Hogs, just like cattle, excuse me, should get some tighter numbers as we get into summer, but tighter numbers doesn't always mean you're going higher. It still comes back to where's demand at and what is that consumer willing to pay. And just one other side note that I'm not sure how widespread of people we get when we look at this podcast, but I think just recently, last week, California raised their minimum wage to $20 an hour. And I think the thing that the general populace doesn't understand is that, do you want the worker to have a good wage? Yes. But you start doing big jumps like that, the wage earner is going to come out on the losing end, because everybody else is going to jack up their price accordingly, and they're going to have less buying power when they're done. You're much better to do it in smaller increments, and hopefully someday we can learn from that.
And then one final market today that was pretty interesting was that crude oil and diesel market. They had quite the dive after all the turmoil and things we've heard in the world. And fundamentally, you'd think that that would be finding some more support, Andrew. Any thoughts on that? And if a guy doesn't have any fuel locked up for this spring or summer, you think that this is a level maybe a guy should look into doing some of that stuff?
Yeah, fundamentally, just everything going on in the world, especially that conflict between Iran and Israel, a person certainly would think that the energy market would be jumping just because of people preparing for a worst case scenario here. So I think the sell off on the Wednesday trade, it was nothing more than just some technical movement. You look at the crude oil chart, it didn't make a whole lot of sense, but if you opened up a diesel chart like heating oil, then it starts to paint a bit more of a clear picture as to why they did it. There's some trend lines and some support levels that the diesel market seemed to be chasing down there. So to answer the question of should a person be buying some of their fuel needs in here, if you don't have enough to get yourself at least through the first part of summer, I like the idea of getting some of that bought and delivered to the farm place just in case things do escalate in the Middle East here in the near term. If you can get your farm diesel for under $3, maybe you buy enough to get yourself through the whole year. But if not, I'd say just enough to get yourself at least through the first part of summer is not a bad purchase right now.
And then any closing thoughts for you, Vince, on any of these commodities or anything you heard in the last week or something that a guy should keep an eye on?
Not really, and Connor, I think we covered most of the stuff in what we're doing. I think you have to think that most of the stuff, as a broken record, I sound like is going to stay in the trading range for the next month or so. Probably takes us to this mid to late June, or excuse me, mid to late May before we get anything going. And then we see what happens at that point. But one of the discussions we had this afternoon, just locally, basis has gotten fairly decent on the corn market if you need to move some and you're willing to own it another way. If you think it's going higher, if you just like the price and want to move it, base is a good place to do it right in here.
One other thought I guess I had about those cattle markets that we maybe skipped over was that cattle on feed report this Friday. Were you able to hear any estimates on that, Vince, or any thoughts on how that might shake this market up at the end of the week here?
I was going to bring that topic up, but I have not seen any numbers yet, so I didn't. But yes, I think we need to be aware of that and just how that turns out. I wouldn't think it's anything extremely bearish from what one has seen in here.
And were you able to hear anything about that, Andrew, that you can share, or any other thoughts that you want to add about any of the markets this week?
No, I haven't heard any official estimates yet. A lot of those come out Thursday morning anymore, it
Hmm.
seems. But I'm with Vince there. I would be surprised if we had anything too terribly bearish in the cattle market on that on feed report, just given a lot of the numbers that we've heard locally and even nationally here. So I think it should be a healthy market here. But again, I'm not going to hesitate to encourage someone to sell some rallies.
And I think that'll do it for this week's podcast. If we could be of any further assistance to you, give us a call at Farmers Trading Company. Our number is 996-6500, or check out the website farmerstradingco.com for more information. Thank you.